Bruce, I love kind of just being casual in the kitchen with you here. It's great to see you today.
It's a good time to have a kitchen talk.
It is. I'm sorry I can't serve you up something, but I want to talk to you about the market and the key strategies to just, there's volatility in the market sometimes and people tend to panic.
Right.
How do they not do this?
Well, there's a few things that we want to focus on. If you're in the market and you're worried right now and you're really concerned and it's causing you stress, you probably shouldn't be there in the first place. Right? The key to managing volatility, you got to stay focused, you got to stay invested, and you got to be patient.
Right.
Markets, generally, history tells us that markets recover over time. So I think that we just have to stay the course.
Okay, so we're going to skip to another part of this question in the sense that if you're older or if you are taking a bigger risk than you can afford, that's where people get nervous, and that's where they can talk to you. They can switch some things up. Yeah,
they can. I mean, we get a lot of questions from older clients that have had the same portfolio their entire working years, and they need to make an adjustment. When your risk tolerance is higher than emotionally you're prepared for, then you have a problem. It's also important that you stay diversified in your investment portfolio, spread across several sectors. Diversification, we can spend a whole hour discussing that.
It's interesting, yeah.
Stocks, bonds, cash, always stay in a position that you've got a time horizon established and you're going to stay the course and you're going to stay with that diversified portfolio.
Right.
Now, also opportunities come when the markets fluctuate and they're volatile, because if you're looking at it over the long period of time, your dollar cost averaging your share price. You're buying high, you're buying low when the markets are down.
Right.
You're putting the same money in and you're still investing. Well, by doing that, you get an average share price that is more favorable. And so by doing that, you're going to accumulate shares, and as the market recovers over time, you're going to have more wealth built from just owning more shares. Makes sense.
It does, and I think you get to know your clients at Resource Center, because that's the thing. You know how emotional they are, you know how much they've got to spend. That's what you help them with.
If you're making decisions from an emotional standpoint, that's usually the wrong thing to do when you're investing in the market. Panic selling creates a lot of anxiety. The dips is not where you want to sell out. You want to sell when the markets are high.
Right.
People do the opposite because of fear.
Yes.
So we want to emotionally make sure that we stay ahead of that by not watching the news every day or the internet. Sometimes the internet is not accurate.
Yeah.
Market investments are long-term, and we need to stay with that.
And you can always change. You can always go back to Bruce and reevaluate.
Absolutely.
One more question I have for you. Is it important to keep some cash reserve, and how much on hand?
It's whatever makes you feel comfortable. That's the right number, right?
Okay.
There is no formula that someone is going to say, this is what you need to have. It's more important to women than men, but having reserves gives you stability.
Right, I understand.
It's liquidity when you need it, and we've all been spoiled because of interest rates at the banks have been higher the last couple of years, and everybody gets spoiled to that.
Right.
But its job is availability when you need it, so you can get through a crisis without having to sell a stock in a dip because you have an emergency.
Bruce, thank you for all that you offer us. We really appreciate it. And if people are uncomfortable with where they're at right now, have them just come right back, and you're happy to help them out.
882-1800, I'll be glad to help.
Thank you so much.
You bet.